Let's just jump right into something that honestly shouldn't be possible. We're talking about an investor who achieved truly world-class returns by systematically ignoring almost everything we're told is essential for success. Now, this isn't a story about genius. It's a story about subtraction. And frankly, it's a little bit unsettling.
So 16%, that was his average annual return, and that's after fees. Now, at a time when the market was averaging around 10%, he was consistently doing this. He didn't just beat the market, he completely blew it away.
And get this, he did it for nearly half a century. We're talking from 1955 all the way to 2002. So this was no lucky streak. This was a sustained, decades-long track record of outperformance, all built on a foundation of, well, honestly, a foundation of almost nothing.
To really get how he did it, we have to start with everything he refused to do. First up, he completely ignored economic forecasts. Didn't care about GDP, didn't care about inflation, or what interest rates were supposedly going to do.
Next, he flat out refused to talk to the management of the companies he invested in. No meetings, no phone calls, no tours of the factory. He basically believed they were just promoters, not exactly an objective source of information.
He also avoided all those compelling stories. The grand vision, the disruptive technology, the narrative of, we're going to change the world. He tuned all of it out. And finally, he used no complicated math. Forget about discounted cash flow models or intricate spreadsheets. His entire process could be done with simple, back-of-the-napkin arithmetic.
So all of this, it brings us to the one question that really matters, right? How is that even possible? How do you win the game by basically refusing to play it the way everyone else insists you have to?
Well, the answer is in this idea of a process of rejection, a systematic dismantling of conventional wisdom. See, Schloss didn't succeed because he found more information. He succeeded because he needed way, way less.
The investor Seth Klarman put it really well. He said something that Schloss seemed to understand in his bones. At some point, the hunt for more information just stops paying off. There's a point where more research doesn't actually lead to better decisions. It might even lead to worse ones.
Just think about the contrast for a second. On one side, you have the typical modern investor, right? Building models, talking to management, trying to forecast the future. And on the other side, you have Walter Schloss. His entire due diligence process, read the annual report. That's it. Everything else was just noise he stripped away.
So, okay, if he threw out almost every conventional tool, what was left? What did he actually use? Well, it wasn't some kind of magic insight generator. It was just a simple, almost crude filter.
This was his entire philosophy, boiled down to one single concept: margin of safety. It's the simple idea of buying something for far less than it's actually worth. Buying $1 for 50 cents. He wasn't trying to predict the future. He was just trying to protect himself from it by getting a massive discount right up front.
And his process? Oh, it was deliberately boring. It was just this series of super simple questions asked over and over again. Is the stock cheap based on its assets? Check. Does it have low debt? Check. Is it hated by the market, trading near its lows? Check. If yes, buy. Then do it all over again. It was mechanical, unemotional, and just relentless.
This question really gets to the heart of his whole philosophy. The modern approach is often about finding those amazing, outstanding companies and paying a fair price for them. But Schloss, he flipped that completely on its head. He was hunting for just okay, fair companies, but at outstanding prices. The quality of the story didn't matter, only the price tag.
Which all means his real advantage wasn't analytical. It wasn't about being smarter or having some secret information. His real edge was all psychological. It was his temperament.
And you can hear it in his own words. Schloss knew that the market is a psychological battlefield. So that simple, rigid process he had, it wasn't just an investment strategy. No, it was a defense mechanism, a shield against his own emotions and the madness of the crowd.
So these were his true competitive advantages. And they're the exact opposite of everything Wall Street celebrates, right? He was detached when everyone else was emotional. He embraced boredom when others were chasing excitement. And he was deeply humble, admitting he couldn't predict the future when everyone else was building a career claiming they could. And this is the price of admission. To stick with a strategy like this, you have to be willing to watch your stocks get cut in half and not freak out. As Charlie Munger points out, very, very few people actually have the stomach for that kind of volatility. And that's exactly why the strategy keeps working for the few who do.
So all of this doesn't lead us to some neat, tidy conclusion. Instead, it leaves us with a really unsettling question, one that kind of challenges the entire foundation of modern investing.
I mean, if the process is so simple, why doesn't everyone just do it? Well, because it feels wrong. Your clients, your boss, they all demand action, complexity, and some grand story of expertise. Our own brains crave those stories and are super uncomfortable with boredom and just sitting still. The whole system is basically designed to stop you from doing what Schloss did.
And maybe the most disturbing idea of all comes from, of all people, a former CIA analyst named Richard Hewer. He suggested that the very thing investors spend their entire lives chasing, more information, might not just be useless, it might be actively harmful. It doesn't make you more accurate, it just makes you more confident. And we all know where overconfidence leads.
Which just leaves us here with this question. If an investor can build a Hall of Fame career by literally rejecting almost everything we're told is essential, what does that say about the value of all that activity? What does it say about the information we spend so much time and energy trying to find? Maybe, just maybe, the most powerful advantage isn't knowing more, but being perfectly comfortable with knowing less.